And welcome back, it's Jason Walter here. Well, Corelogic finally did it. They downgraded their housing market forecast over the next 12 months. So that's the topic of today's video. Hope you guys get a lot of value out of today's video. I have a lot of information to share, so let's go ahead and dive right in. This was published on the 7th of June, which is yesterday at the time of this video. So if you guys aren't familiar with Corelogic has what's called an HPI, or Home Price Index, and this is designed to provide an early indication of home price trends across the United States. And by the way, at the end of this video, I'm going to be sharing the top 5 cities that they are forecasting that have the highest risk of home prices declining. So stay tuned for that here in just a little bit. In any case, this is published monthly, and this incorporates data going back to more than 40 years. So for April 2022, home prices nationwide, which include distress sales, those are defined by short sales and foreclosures, of course, increased year over year by 20.9% according to Corelogic here. And it says on a month-over-month basis, home prices increased by 2.6% in April 2022 compared to March. What's funny about this is that Corelogic was forecasting for home prices to only increase by 1.2% during this time period. So they actually were far off. They actually increased by 2.6%, far more than their 1.2% that they were expecting. So here's what Corelogic is forecasting. They're forecasting for home prices to increase month over month by only 1.2% from April to May of this year. However, on a year-over-year basis, this is from April 2022 to April 2023, they are forecasting for home prices to increase by 5.6%. So in other words, Corelogic is still forecasting for home prices to increase over the next 12 months, but far less than we're seeing right now. So again, we're seeing right now, at least from April 2021 to April 2022, a 20.9% increase. So now they're calling for only a 5.6% increase year over year. What they're also calling for is that rising mortgage rates are going to cool home buying demand. So nationwide, home prices posted another record high year-over-year gain, again at 20.9%. And they said here that rising mortgage rates drove buyer urgency and the resulting price growth, with about 70% of U.S. houses selling for more than their asking prices this spring. However, though, higher mortgage rates will likely also put the brakes on buying demand in the coming months, causing annual home price appreciation to cool to 5.6% by April 2023. They're right to say this because rising mortgage rates have in fact caused home buying demand to cool off. I actually made a separate video regarding that last week. It's titled right here, Something Huge is Occurring in the Housing Market, that was actually published 5 days ago at the time of this video. If you guys haven't seen that video yet, I'll leave a link below for you. In any case, have a look at rising mortgage rates over the past 3 months here. This is according to the Mortgage News Daily. So rates as of the middle of March were basically at 4.42%. But look what happened through the end of April. So basically in a month and a half, mortgage rates increased to 5.4%. So in other words, rates increased by 1.5 percentage points in just a month and a half, which is absolutely insane. Because back in 2018, it took approximately 12 months for mortgage rates to increase by 1%. And mortgage rates peaked really at 5.64% on May 6th. They declined all the way through the end of May. But as you guys can see here, mortgage rates have been increasing greatly. We're currently at around 5.5% according to the Mortgage News Daily. And part of the reason why mortgage rates have been increasing over the past week or so is because the yield on the 10-year US Treasury note has been increasing greatly as well. So the yield is just over 3% at the time of this video. All right, so going back to this report from Corelogic, according to their president and CEO, who's Patrick Dodd, he had this to say: the record growth in home prices is a result of a scarcity of for sale inventory, in other words, a lack of houses for sale, coupled with eager buyers who want to purchase before mortgage rates go higher. However, as I've been mentioning though, mortgage rates have been increasing. So it says buyers who closed on their house in April had locked in their mortgage rates in February or March when rates were much lower than today. With 30-year fixed rate mortgage rates much higher now, we expect to see waning buyer activity because of eroding affordability. As a consequence, our forecast projects slowing price growth over the coming year. So in regards to a lack of houses for sale, here's the latest we have from Redfin. This is for the 4 weeks ending May 22nd of this year. So housing inventory in the US right now is at 585,000 houses. That's actually down 12.92% from 1 year ago when we had approximately 671,000 houses. But as you guys can see here, look at the trend line for 2022. And by the way, this is 2021, 2020, and then 2019 right here. So we started the year off, as you guys all know, down 21% compared to the first week of 2021. But the gap between 2021 and 2022 has been narrowing. So again, down 21% at the beginning of this year. Now it's only down 12.92%. However, the biggest story though really is have a look at inventory compared to 2019. If you guys follow the channel, you guys all know we had approximately 1.1 million houses for sale at this time in 2019. Now we only have 585,000 houses. So right now we have approximately 50% less houses for sale compared to this time in 2019. And because of all this is why we're seeing record high home prices in the US. However, I'll definitely keep you posted because we're seeing a lot of early indicators that's telling us that home buying demand is decreasing because of rising mortgage rates and of course a lack of housing affordability. Okay, changing gears slightly, let's talk about home prices across the nation by state. So for April 2022, again, home prices increased overall in the nation by 20.9% year over year, and no states posted an annual decline in home prices compared to 1 year ago. In other words, every single state in the United States had a gain in home prices compared to 1 year ago. The states with the highest increases year over year were Florida, Arizona, and Tennessee. So here are the top 10 states by the percent change in home prices compared to 1 year ago. Again, Florida led the pack at 32.4%, which is absolutely insane because historically speaking, home prices tend to increase in the range of 3 to 5% per year and not 32.4%. In any case, here's the top 10 states that had the biggest gains. Arizona was in second place at 28.1%, followed by Tennessee at 27.2%, the Carolinas approximately at 25%, Utah 24%, Montana 21.7%, and Colorado at 21.4%. Also, looking at this map here, the states in dark blue or dark purple have a gain in home prices compared to 1 year ago by over 20% or 20% or more. And as you can see here, that was across many of the western states in the United States here, with home prices increasing by more than 20%. In stark contrast though, we didn't see any states with decreases in home prices, but we did see some states with gains only in the range of 5 to 10%. That was basically in North Dakota and also in New York, for example. Okay, let's talk about home prices by city. So here are the top 10 metros by their change in home prices compared to 1 year ago. Again, this is April. San Diego at 26.0%. Look at Phoenix, 29.7%. The biggest increase across these top 10 metros in the US here. Las Vegas, a gain of 27.1%. Denver, 21.7%. Miami, 23.0%. In stark contrast though, look at Chicago, Washington, D.C., and Boston. All gains of far less than these other cities here in the range of 10.4% to 10.9%. Far less than Phoenix, for example, at almost a 30% gain year over year. All right, according to Corelogic, here are the top markets at risk of home prices declining over the next 12 months. So number one is Silverdale, Washington, a very high probability of home prices declining over the next 12 months. Also with a very high probability was Lake Havasu City, Arizona, also in Bellingham, Washington as well. That was followed by Hartford, Connecticut with a high probability. That is a 50 to 75% probability of home prices declining over the next 12 months. And at number 5 was Olympia, Washington with a high probability as well. So comment below with your biggest takeaways from today's video. Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Also consider subscribing if you haven't done so already. I post the latest housing market trends so you guys can make a more informed decision about where you should buy or sell a house. With that said, hope you guys have an awesome day. Look forward to seeing you on the next video.